Hi there. Welcome back to Prices at the Pumps, our Wednesday weekly look at all things energy related. I'm Scott Squires, and welcome once again to Dan McTagg, the energy expert. Dan, let's get right to it. Folks like to know right away when they listen to Prices at the Pumps on SaltWire. Newfoundland adjusts their prices tomorrow, Thursday, the rest of Atlantic Canada, Friday. What's Newfoundland consumers in store for? And then the rest of the Maritimes on Friday. What are we going to see, Dan?
Yeah, well, look, we were pretty much spot on last week. Gasoline prices are going to be up 1.8 cents a liter in Newfoundland, but diesel drop almost a penny, call it 9/10 of a cent. So hold off if you need diesel and fill her up if you need gasoline. Now, for the rest of Atlantic Canada, so New Brunswick, Nova Scotia, and PEI, look for that to be about a 2 cent, maybe a 2.1 cent a liter increase on Friday, while diesel will probably only drop about half a penny. The extra day that the additional Atlantic provinces change on Friday is important because we're seeing a pretty big rally today in gas prices and on the markets. And so that is likely to lead to a little bit higher increase in gas prices and a little less savings on the diesel side. We're probably at the point of in which future weeks will see the normal natural build in prices effective. This is probably the end of it, and we're going to start to see prices move up as we build towards the beginning of April.
Now, I know we're starting to climb a little bit out of the colder winter months. Still some cold ahead, but spring around the corner. What are we seeing with home heating fuel, Dan, and other means to heat your home?
Yeah, the home heating fuel has been pretty modest. We've actually not seen any major increases in quite some time, and it's really owing again to that very significant supply glut that we have both in propane and natural gas. It hasn't been the winter like other winters, much of it owing to the effects of El Nino, which I think has been a blessing for many. And of course, last year's water vapor trails in the air as a result of the Hunga Tonga volcanic eruption. A lot of people tend to overlook that, and some of that data is suppressed, but it's kind of hard to ignore. Either way, it meant that diesel, particularly home heating fuel, has not had the hit that it was normally expected to have given warmer temperatures. But what diesel will now start to see is a bit of an increase. Diesel and home heating fuel are really connected at the hip. We're going to start to see those prices move up in concert with gasoline, mostly because experts had thought the oil inventories, or at least the product fuel inventories in the United States, were relatively in balance. They're not. And the Department of Energy, the EIA's weekly report, Energy Information Agency, shows that there's a pretty significant draw in both diesel and gasoline and home heating fuel this week. So we could see this time next week, diesel prices moving up along with home heating fuel by about 2 cents a liter. I know I'm getting ahead of myself, and gasoline probably up another 2 cents a liter this time next week.
Dan, something that caught my attention, a post that I saw a couple of days ago from the Telegraph. They're out of the UK, but a lot of times things that they post can be applied to what's happening in North America, Canada. And we always talk about, right, geopolitical things, what's happening at OPEC plus nations. So their article from a couple of days ago, Russia and Saudi Arabia have led members of the OPEC plus cartel in extending cuts to oil supplies for a further 3 months. On the surface, what does that mean potentially for us here in Canada?
I think it's signaling that the region of the world that controls over 40% of the world's oil production is saying we want this market disciplined. The market has been tap dancing around the idea that fundamentals don't matter, and they've been distracted by Chinese demand, which isn't necessarily something you can hang your hat on. Concerns about high interest rates creating a bit of a demand lull. But all of those things are not relevant. And what OPEC has basically said is we are going to continue disciplining this market. We will keep 2.5 million barrels of production off the market. And they're showing extraordinary discipline in meeting those targets, which means that unless the United States can pump even more oil, we're eventually going to find ourselves in a bit of a shortage. Now, it's not apparent yet in North America because over the past couple of weeks, U.S. refineries have been going through their seasonal maintenance. Some of them actually avoided it last year, and those can have real consequences. Try to avoid a couple of oil changes in your car, and you'll find out. But it's likely to lead to an increase in oil prices. I see it's up almost $1.50 a barrel today, for instance. This is a reflection of what money managers and unfortunately a lot of woke capitalists believe, that the world's all about ESG. You're not going to get away from oil anytime soon. And it looks like the cartel is beginning to flex its muscle. And the makeup of 2.5 million barrels cannot be done with a country like Canada that has no takeaway pipeline capacity extensions happening anytime soon. Yeah, 500,000 maybe for the Trans Mountain pipeline expansion when it happens. But United States is max in terms of production. Where you're going to get the oil? Yes, Guyana has some. Yes, Brazil might have some, but not 2.5 million barrels. So we're really looking, Scott, at OPEC getting what it wants. It wants to push oil to $90 a barrel for Brent and about 85 for WTI. Of course, with taxes on gasoline here in Canada coming up on April 1st, both the increase in the clean fuel standard in July, as well as the April 1st increase in carbon taxes and the switch over from winter to summer gasoline, which is going to happen in about 3 weeks. We're looking at what could be potentially an across-the-board increase right here in Atlantic Canada. And let me say it here first on SaltWire. We're looking at a potential of a 15-cent a liter minimum increase for gasoline and diesel between now and the end of April. So it's not going to be pleasant, but it shows that what happens when markets have had enough of the shenanigans being played by money managers and AI and day traders using a strategic commodity like oil as if it's some kind of a meme stock. There are consequences, and the consequences are going to hurt consumers.
Well, we'll certainly continue to watch those developments in the coming weeks and months. And something else, Dan, we talk about a lot of things to do with the energy sector, and we know the push that's on in Canada right now to move to electrification, net zero, and electric vehicles. And another article that caught my eye from the Financial Post, and I'll read a little bit about it here, and then I'll get you to maybe break it down and put a little context to it. Fall in battery metal prices, a concern for Canada and allies, says Jonathan Wilkinson. And I'll just read a first little bit. Jonathan Wilkinson, the Minister of Energy and Natural Resources. And I'll read a little bit of the first part of the article. Slumping prices for the minerals needed in the energy transition away from fossil fuels is a concern for Canada and its allies, says Energy and Natural Resources Minister Jonathan Wilkinson, since it's preventing capital from moving into projects the country wants to develop. And again, you can find that article online at the Financial Post. But Dan, what does that say to you? What does it mean for consumers, for Canadians?
Well, I think it's a serious admission by the former Environment Minister, now Natural Resources Minister, that they really got their economics wrong. And it's a serious goof up that could cost you and I billions of dollars. We predicated our battery plant investments, Northvolt, Stellantis, and of course, VW, based on battery prices and the price at which you sell batteries to be a certain amount. If the price of those products is dropping, plummeting by 50, 60, or even 80%, it means that the investments that we've made predicated on those numbers for payback will never happen. Worse, it did not take into account the fact that China has now a glut, not just of electric batteries, but most importantly, cars, which they're prepared to dump into global markets. It's critical people understand that not getting your economics right in such a short period of time after you've made commitments, many of these commitments made just in the past year, means that someone obviously wasn't looking before they leapt. And as a result, we may be holding the bag on tens of billions of dollars of monies that we will not get back, and for which we've committed through the borrowing of greater amounts of money. Canadians are going to pay for this in terms of higher interest rates. They're going to pay for this in terms of not getting our money back. And it means that we're going to have to find a way to get back $40 billion. You start to look at the totality of what this means. I think it's a shocking revelation and a very sobering one that ESG and, more importantly, net zero mandates have no basis in reality and devoid of any thought can be very, very costly, if not damaging economically to the country. This isn't about liking or disliking EVs. This is about not getting your market fundamentals right. And it should be something that will provide, a very cold shoulder to any future investments in electric vehicles anytime soon.
Well, Dan, that's why it's great to be able to have you here on Prices at the Pumps on SaltWire to wade through some of those topics and to get a little context to the headlines. We appreciate it. And before we let you go, when you're not with us here, breaking news on SaltWire, where else can folks find you, Dan?
Well, where I'm not breaking the news here in SaltWire, you can always get my ideas on these topics at Canadians for Affordable Energy, so affordableenergy.ca. And of course, gas price predictions can and will occur over the next several days, as they do 2-3 days ahead at a gas price wizard. So there's a way of getting information at some point down the road, 2 ways to communicate. And of course, you can always get me on Twitter, gaswizard.ca, or just hashtag gaswizard.
You may have just created a new social platform, Twizzard.
Twizzard, yes. It's 2 for 1, Twizzard.
I like it. Listen, why not? We all need a new social platform from time to time. And I will say, Dan, we talked about it last week, but it's great to see your lovely East Coast vibe lighthouse shoreline picture still behind you there.
It's going to stay there. It's a keeper. And, I want to thank Value Village for making it happen. I think I've got myself a real Rembrandt.
Well, I'm going to have to go and see if they have any Jackson Pollocks there. I'll check out my local Value Village coming up soon. Dan, always great to chat with you. Enjoy the rest of your week. Have a fantastic weekend, and we'll look forward to doing this with you again next week.
Looking forward to that. Thanks for having me, Scott. Cheers.
Pleasure. Thank you, Dan.